Hello, welcome to CMFXPRO. We're going to check the markets on Friday up against our indicator conditions. Apologize for not being so much active this week as we had some pretty severe weather and devastating conditions hit our area. I'll be back next week, starting Sunday, looking at conditions in the market and giving regular conditions for the New York session and possibly Asia session. So look forward to the video is coming back online, and once again I apologize as we had to take care of things at home, as they say. So let's get going. Please stop and read by continuing you are accepting these terms. Alright, going to start right off with USD Chef, right from Wednesday, really even Tuesday. Some really nice ranging conditions, even at the beginning of the auction, 20 pips stop loss or so, even less than that, and you were pretty much running for 60 pips or 55 pips. Pretty good risk-reward ratio, and that pretty much happened Wednesday, Thursday, and Friday. Really nice. So we got some nice ranging conditions. Obviously, USD index, same thing, high exhaustion, low exhaustion, leaving off at low exhaustion up against day low and 800 GU. Had some nice low exhaustion Wednesday and took off from the rise from there. EU, again, same thing, ranging Wednesday. Counter trend areas, counter trend on the 800 possibly. We'll see if that makes a nice fall tweak beginning move next week, and then continue for the rise. Let's see, AU, same conditions starting Wednesday. Got into the bearish market or bullish market on Wednesday Asia session. Small counter trend pullback, retracement up against the 800. Really nice rise today to the day range high. And same conditions. Wednesday was the low exhaustion area where everything took off, and you can see perfectly where my exhaustion is. I keep trying to tell everybody, and a lot of people look at my indicator and they just can't believe it in astonishment that it can't be that simple. Well, I worked hard enough to prove that conditions aligned in the right way with the proper data representing the most two simple movements in the market, which is price action and EMAs, which is what the institutional banks and market makers use as conditions of dropping price, is the movement of the major EMAs and certain correlation of price action. So when I worked hard to find out the exhaustion areas of both of those combined, and that's why you see these do not repaint. These stick, they hold. You can put your price in right there. You didn't even have to go less than 10 pips, and it took off for the rest of the week on Wednesday. Great risk reward. I mean, 15 pip stop loss, and that gained over what, 629, 545, almost 100 pips. Beautiful. And things can be simple. It just took a lot of hard work to get it to this point. So I want everybody to see what I see, get rewarded the way you should be rewarded in this industry, for not so much overwhelmingness and this person saying this about this. And if it doesn't make sense in your head of simple movement of the market, for example, I'm not a big believer in harmonic scanners. They just keep repainting the tips over and over. Next thing you know, 100 pips later, and price hasn't gone bullish or bearish. It's ridiculous. Who wants a 100 pip stop loss risk on anything? So if you look at these conditions of what I've done on my end, and I don't think there's anything out there that represents what I'm saying, price exhaustion, price action exhaustion against EMA exhaustion, is the correlation of what I use. And I don't see it anywhere out there in the industry as a combination power strategy or method. So it's plain and simple. What you see is what you get. Very little drawdown, great reward. Very little drawdown. Look, 2 dots right here. There's barely no drawdown on that. And you go down 75, you get on almost 20 pips right there. Zero drawdown on these 2-hour candles. Same thing with this. Zero drawdown period. candle closed, exhaustion established, take it down, 608 to 6575. That's almost 30 pips or more. It's just crazy. And you know this started the bullish run Wednesday, so obviously you could take it up to here, exit, and take all these minor trades or take the big counter trends, but make sure you get back in line with that male or 200 to continue the bullish trend. You can make money if you want to on the counter trends, but always remember this was the big move this week. They tried to do the overextended exhaustion trapping, obviously. Okay, let's continue. UJ. It's a nice high exhaustion Wednesday, obviously ranged around Thursday, and obviously we're back at low exhaustion conditions, day range low hit. Let's see here. We had some high exhaustion back over here. Pretty much everything kept hitting that area. So to me, that would have been a clue. We had some nice low exhaustion here. I would have definitely, anything that hit this support area of the previous high exhaustion, I mean, I would have just been selling all day long. And then look at this, the ranges of the low exhaustion exactly meet up. So be looking out for this, and if it goes long next week. EA. Really a lot of tight EMA ranging around the 800. GA. Was a nice bullish run this week. Let me straighten this out so we can get back here. Look at that low exhaustion right here from the week before, I believe, and that just pulled up nicely. So had some high exhaustion here. If you notice where this exhaustion is and then it drops, you will profit in this area. And then you just get out on a smaller time frame. If you mark that down, something like that. Oops, let me go back to the 15 minute. Let me hit this right here. Go to the 5 minute. Pretty much right there. Go to the 1 minute. And there's your low exhaustion from that. Look at that. You saw this condition on the 15 minute high exhaustion, and it also is on the 1 minute. Look at this. It tells you get out right here. Get out. Get in. Out. I would have re-entered right here, hitting on the 800 again, especially with the low exhaustion symbol again. I definitely would have made another re-entry, and then took out up here, and then profited. 1 minute and 5 minute, if you're really like scalping and just graining some quick pips, 10, 20, 15, whatever. Just go in from the 1 minute to 5 minute on this low high exhaustion. It's incredible actually. If you just want an intraday trade. Continue. GN. We have low exhaustion here, mostly coming down from this high exhaustion. EN, same condition, had high exhaustion starting out and got all these counter trend conditions getting back to the 200. So everything's really in line with his previous nice multi-session M. EJ, really just ranging up and down around the 200. CJ, nice high exhaustion. Wednesday, nice drop. Now everything's ranging off the 200. Now finally broke up to the 800. AJ. Let's see here. This had some high exhaustion quite a while back at the monthly range high, I believe. Pretty much falling off the 800. Downtrend 200. GJ. Nice ranging this week. If you would have broke this down into GU and UJ cross comparison exhaustion, I bet you would have been beautiful. Let's see. NJ condition, low exhaustion, high exhaustion. I mean, it don't get any easier than this, guys. This is why everybody's going crazy over the indicator, because it's just that simple. Low exhaustion here, enter, and yes, it came back. I actually tried to do a reset trap, and they did a pretty good job of it. It came back down, they took it right away from them. That's like a double reset. They could have thought this was the second leg of the W, stayed in and not worried about watching your trade, and they took it right back away from them for almost a possible reset condition on an M off the 50. But they eventually just pulled away. Steph, nice low exhaustion areas and hits off to 200 into your low exhaustion, now above 800 EMA. Euro Great Britain, Wednesday, again, took off. Let me see here. Doesn't look like the indicator's loaded. There we go. Low exhaustion. GC. Nice rise. Get out. If you break these conditions down on the M15 into the M1 or M5, you will find these exhaustion levels on there. It's typical beat the market maker. You got to work your way down to time frames depending on higher time frame conditions. If you see an ID 50 finger on M15, start looking at your M5 and M1. See what that exhaustion conditions are. Great Britain Chef. Again, we got some high exhaustion here. And then down off to 200, back up again, heading towards the 800 day range high. Again, all these conditions that don't show any exhaustion, break it down to the M5 and M1 and find them. Make some money. Zealand CAD. Let's see. Because we're doing a lot of updates on the indicator currently, we're trying to find more advantages after the exhaustion is exposed. We're looking for not quite the safety entry, somewhat around this area, but somewhat, right after all this exhaustion, we're looking for a symbol as the second leg of M&W representation, a little bit better and tighter. So we're really cranking through some data to make that happen. So be looking forward to that. New Zealand Chef. Look at this. Finger, W, off to 50. Does it get any more perfect than that? I don't think so. Gold. Had a really nice, as they call it, melting down, low exhaustion, monthly range low hit. That looks like a pretty good entry, don't you think? High support, monthly range low exhaustion, take it out. Make some money. Low exhaustion on oil, first leg, second leg off to 50. First push down, going back through, came back, weekly range low hit, and then it took off. Here's the index. We're up at low exhaustion, day range low, up against the 800 area. So we can say those conditions, most likely false week beginning, it'll make a rise up probably to the 200, possibly. And we'll just have to, you always wait for them to present the moves for you and take advantage of it after. Our opportunities on the other side of trapping and exhaustion. And this is exhaustion. So you just kind of wait it out. Once this exhaustion kind of shows pretty quick up against other important criteria, you take the trade. Thank you everybody for joining me. Have a great weekend. See you next week.